Welcome to RBC's Markets in Motion podcast, recorded October 21st, 2024. I'm Lori Calvasina, head of U.S. Equity Strategy at RBC Capital Markets. Please listen to the end of this podcast for important disclaimers. 3 big things you need to know. First, the early earnings stats are mixed for the broader market, but promising for the rotation trade. Second, company commentary continues to suggest the plumbing of the economy is in good shape, but with a few clogs. Third, our examination of index sector and industry performance and trends in polling and betting market averages suggests to us that several traditional Trump trades, specifically small caps, energy, and financials, have remained intact. If you'd like to hear more, here's another 5 minutes. Now let's jump into the details. We'll start with takeaway number 1. The early earnings stats are mixed for the broader market, but promising for the rotation trade. Here's what jumps out to us on the stats for 3Q reporting season so far. First, the headline stats are solid to be sure, but not quite as strong as one might expect given the strong move higher in the S&P 500 recently. The 4-week average on the rate of upward EPS estimate revisions for S&P 500 is just 43%, suggesting we're seeing slightly more downward than upward revisions. In terms of actual results, the percent of companies beating consensus on revenues is off to a good start within the S&P 500 and tracking higher than 2Q, 69% for 3Q versus 61% for last quarter. However, the percent of companies beating consensus on earnings is actually down a bit, 75% for 3Q so far versus 80% for 2Q. Second, we're also seeing some good signs for the rotation trade out of mega-cap growth names so far. The rate of upward EPS estimate revisions continues to favor the biggest market cap names in the S&P 500, but to a lesser degree than what's been seen in recent months. Another good data point for the rotation trade is that 2024 EPS growth rate implied by bottom-up consensus forecasts has moved up for financials recently. On 2025 consensus forecasts, the EPS growth rate has also moved up recently for healthcare, materials, and industrials. With this latest move, healthcare now actually has the highest growth rate anticipated by consensus forecasts for next year. Meanwhile, the 2024 and 2025 earnings growth rates embedded in consensus are still quite strong for the key growth sectors, tech and communication services, but their trends have been relatively flat of late. Moving on to takeaway number 2. Company commentary continues to suggest the plumbing of the economy is in good shape, but that there are a few clogs. Financials have been heavily represented in the results so far, and for the most part, descriptions of the macro backdrop continue to emphasize resilience, steadiness, normalization, and a resilient but discerning consumer. To be sure, a few companies have noted more challenging backdrops, but these companies tend to be from industries whose challenges have been well telegraphed for quite some time. There are no surprises there. On the consumer, value consciousness, resilience, and the gap between the low and high end continue to be emphasized. One company's emphasis on how the consumer has been acting rationally but not stressed was particularly noteworthy to us. Companies have also generally expressed optimism about the positive impact of lower interest rates going forward. Uncertainty emanating from the U.S. election has also remained in focus. We'll wrap up with takeaway number 3. The stock market seems to have some muscle memory on the election, with several traditional Trump trades emerging again. With the U.S. presidential election only 2 weeks away, we examined how different indices, sectors, and industries have been trading relative to trends in betting markets and polling averages for the 2 candidates and the spreads between them since Harris entered the race. These relationships may be shifting or coincidental to be sure, but the results were still interesting. Both S&P 500 and NASDAQ 100 have been aligned with Harris and the Harris-Trump spread and polling averages over the past few months. But very recently, it does appear that the relationship between these indices and the Harris-Trump polling spread is breaking down. We've also started to see the Russell 2000 become aligned with Trump's polling average very recently. Energy performance relative to the S&P 500 has also been inversely correlated with the Harris-Trump average spread. And banks' performance relative to the Russell 3000 has also been inversely correlated with the Harris-Trump betting average spread. What's the story we see in the data? Generally, we think that the equity market either got comfortable with Harris or was just ignoring the election back in August and September, but may be starting to sync up with Trump again. We also see indications that some traditional Trump trades by the U.S. via small caps, energy, and banks have remained intact under the surface. That's all for now. Thanks for listening, and be sure to reach out to your RBC representative with any questions.
This content is based on information available at the time it was recorded and is for informational purposes only. It is not an offer to buy or sell or a solicitation, and no recommendations are implied. It is outside the scope of this communication to consider whether it is suitable for you and your financial objectives.